no financial advice here. Roll the quick break before I get myself in trouble here. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering a 7-day free trial and 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys, we're back with Chris. And real quick, before we jump into stuff, I just want to say apologies to the audience for missing the news drop there. 10 a.m. we do have CB consumer confidence came out lighter than expected, and market reaction here. Dow's selling off slightly. S&P not moving much. NASDAQ not much. Nothing really moving too heavily on this number here today. Consumer confidence. Hey, Chris, how's it going, man?
Going great, guys. Nick, that was an awesome pun drop you did there on the Tilray and the weed stocks.
I'm glad somebody got it. I'm almost in my 30s, so I've got to really start upping the dad jokes. I don't have kids, but
it's true.
I got to prep.
Yep, good stuff. So yeah, the thoughts on the solar panels. The first thing I thought about was subsidies, where that's really what's going to get a little bit more widely accepted. I just looked at the charts. I mean, I wouldn't mind seeing TAN, that solar ETF, down here around $25, and then start to look at positioning kind of ideal lows. And I could justify holding on to it there at 25. I just finished up one of my trading rooms today. I have some very interesting stuff I'd like to throw at you guys if you give me just 5 or 10 minutes.
Let's do it.
How about this? I'm going to go to the Japanese yen. I'm going to go to this feed for Forex ICE because we've got about 50, 60 years of data. What do you guys think about the last time we had a major low in the Japanese yen that was dramatic? It was back here in 1978. Big low, and then we went up and came back down and then broke through that. So a couple things I'm looking at longer term. Everyone right now is thinking, okay, the BOJ's got to intervene. Well, they just came off a negative territory from negative 0.1 to now sitting between 0 and 0.1. So they're no longer negative interest rates, but it's certainly not enough to unravel the carry trade. And I don't think that's the case until we see something dramatically worse. And so if they don't break in and intervene at 152, here's what I think. I think that we have a massive head and shoulders pattern from all the way down here at historical lows. And all I'm measuring is this is wave 3 symmetry right here where we had that top at 152. If you just look at simple wave structure, wave 1, 2, 3, this pullback is wave 4, and pushing to wave 5 gets us up to 175, 176. Now, there's clearly the threat of BOJ intervention we have to watch and see, but I think right now the carry trade environment is pretty strong. I don't think it unravels anytime quickly. I don't think the Nikkei nor the U.S. markets want to jump into a bear market all of a sudden. So I think this thing drifts higher. I think the pain trade is higher. I don't think there is major resistance here on the higher time frame. And you know as well as I do, if stops get ran at 152, we could easily stretch another 300, 400, 500 pips higher. 160 is a round number. That's 900 pips higher. And what's to stop 160 from becoming 170? Just saying. So I thought it was interesting this morning. It's like, I haven't looked at it in a while, but we're talking about 50 plus years of price data and just looking at a big technical pattern. So thoughts on that?
No, I think it's interesting because the dollar yen, the interest rate hike was the first time in a long time for the Bank of Japan. I think it was
Mhm.
2007 was the last time they hiked right before the great financial crisis, and then they proceeded to stay, in negative interest rate territory for a long, long time. Um, I think that, for me, what I'd have to see to really get bullish dollar yen heavily would be um, some sort of higher for longer relative to its peers. So I think that the dollar story right now is not, are we going to get rate cuts or not? I think we probably get rate cuts. The question is, compared to its counterparts, is the US dollar, is the US going to continue to outperform Europe and the UK? Are economic figures going to stay relatively strong so that the coast down in interest rates is relatively slow? The slower that interest rate cools, the stronger the dollar looks relative to its peers, and that includes Japan as well. And I think you make a good point. Unless you see some sort of big risk off shift, the carry trade is very alive. And I don't know. I'm kind of with you. I think that the attractiveness of the carry trade is on both sides, right? The dollar, if it keeps that interest rate higher for longer, that carry trade stays just really, really attractive at, where we're at 5.25% compared to the yen, which is zero. Yeah, I think that spread staying wider is going to keep propelling this thing higher. And if that narrows dramatically, I think it can still exist, but I think the real huge upside would be a strong push. Frank, do you have any thoughts on Japan specifically? I know we all kind of talk about the dollar in circles around here, but do you have any thoughts on the BOJ side of it?
Yeah, I'm honestly, I don't know if I see it at 170. And Chris, I don't know what time frame you're looking at, but I I'm at a point right now where I feel like the sentiment shift has changed, and we're also at a pretty major level here. If price can break above, um, I might slowly change my mind, but I think now that we're seeing the the monetary cycle for the rest of the world is now leaning dovish. The dollar is essentially going to get weaker, in my opinion. Um, the tightening cycle is over, whereas Japan was the exact opposite, and now they're kind of flipping it around. And you're right about the carry trade, where it's not really enough to really break that the gains you can have on carry trades against the yen if you're buying the dollar. But I also think because of this shift in sentiment, it could be enough of a catalyst to start pushing things lower. But I guess we'll just have to see. In my mind, I was looking at potential shorts on UJ, but if it breaks above, then it breaks above, and I guess the dollar remains strong. But I guess it depends on economic numbers too for both countries.
It's
Um,
a big, it's definitely a big level. I mean, where it's currently at, it's so true that if this level breaks, totally could see a run. And Chris makes that point about like a stop hunt above that area. Like if there's a lot of people, and Chris, the S&B story in like 2015 where they were pegging it against the euro, and then when that fell out, the euro against the Swiss franc just crashed by like a bajillion pips in a second.
Yep.
If confidence is lost, that is a play, I think, for perhaps short-term momentum, but perhaps a bigger picture. Because if this level breaks, I do see, and again, I'm kind of with Frank. I need to see what happens before I get overly bullish or bearish. I'd say I'm pretty neutral on the pair right now. But if you do get a breakout to the upside, and the confidence is lost that the bank is actually going to hold this 150 region, because we've you know double, triple, quadruple topped trying up in this level, and people kind of are thinking, Bank of Japan has been pretty clear here, but like you pointed out, if that confidence is lost that they're not going to intervene or they're not going to be able to hold it there, you could very well see a big spike higher and just shock the world with it.
Yeah.
the
Well,
Bank
I
of
can tell you the
Japan,
last thing you want to do is trust a central bank. I
Yeah,
mean, trading from
yeah,
2015, I can tell you that a central bank telling you we're going to do this, we're going to do this, we're going to do this, that means nothing. And I
Yeah.
don't think we necessarily have a flash crash to the upside, but I will say that all the Bank of Japan has to do is stay quiet, and we break above 152, and all of a sudden we're talking about the dollar yen at 155, drifting up to 160, and then you'll start to see the sentiment shifting where, your retail positioning is going to be, heavily short on the JPY, and they're just going to get blasted out. So I'm saying that for this. So the other thing that happened last week is the Swiss National Bank cut rates. And I think that was a big move ahead of the FOMC, because now that opens the gates for other central banks to not have to wait for the Fed in June. And it's interesting because last week, Nick, you and I did FOMC, we did the trading battle, and it was pretty certain that the market's like, okay, the Fed's going to cut 3 times this year. And then this week, you already have Fed speakers coming out, like the voting's like 8-4 in favor of cutting 3 times this year versus scaling back and only cutting once this year. So there's already like a mixed party on what the Fed's going to do. And going into May or going into June, I'm sure that Powell wants to see a little bit more uniformity and consensus on what the Fed actually has to do for later in the year. So there's already some Fed speak. But my point was the Swiss cutting ahead of the Fed means that now Bank of Canada, now ECB, now Bank of England, now these other central banks can say, okay, it can be done, it can be cut. And like the Fed's going to cut as well, but economically, think about where these indexes are going. The DAX is up, the Nikkei is up, the US is up. And another thing with my chart, this is the Chinese yuan, and this is another currency pair that I looked at it this morning. I don't know if you guys have ever seen the exchange rate on this, but if you put in like a mini lot, so 0.10 lots on the dollar yuan, it's $500 in margin, which is about 2.5 times more expensive than the euro dollar, and it only pays about 14 cents a pip. So this run right here was about 1,000 pips. Can you imagine holding something for double the margin and getting paid 1,000 pips, getting paid $140? It's pretty lame. So it's not something I'm trading necessarily, but this is another one that the currency is related to the index. If the HSI, the Hang Seng, goes higher, I think it goes higher on potentially a weaker yuan. So just like you were mentioning, the dollar maybe doesn't have to do a lot. I mean, if the Fed cuts 1 time or 2 times or 3 times, I think economically the dollar and all these indexes are probably what the markets are rather going to look at. Rather than seeing like stronger currencies, we're just going to see stronger indexes. And then it's a race to who's the less dirty shirt in the laundry. I mean, if the U.S. is like the better economy to get behind, and the JPY and the yen is still being arbitraged in the U.S. economy, it makes sense. Like borrow cheap and put it where money can grow. And China might start to lift animal spirits a little bit more. This is interesting. Like I don't think there is a triple top pattern. And so when I see a setup like this on the Chinese yuan, we have heavy intervention levels here. But if this comes back up and tests the highs, if we don't react to that level, all this is to me is an ascending wedge, and this breaks and goes higher. And I see the dollar yen doing a pretty similar thing. Now, you're both right. Like looking at that chart in the dollar yen, it's not there yet. It's not broken 152. But if it breaks 152 and it's silence from the BOJ, that's what I'm saying. Just don't be surprised if we're going to 155. Don't be surprised if we stretch and do something silly like 160. So just throwing it out there. I just thought that was an interesting, like, big picture move where technically it makes sense. I mean, I looked at what really makes me mad is I talked about this in 2022 about this potential bullish pattern. I talked about this being a head and shoulders. I talked about this area here, especially being a breakout trade, and I traded it north all the way up to this level at 120. And then I was an idiot thinking like, well, I've got overbought conditions and I got this EMA and it's going to come back and have a reversion to the mean. And I was a moron that I was fighting this trade for like six to 8 months. But
I did the same thing, Chris. I was long dollar yen around that time and totally, trailed out way too early. Just watched it continue to run. Also, I just wanted to show, just in reference to what we were talking about a moment ago, for people who haven't heard about this event that happened in 2015. In 2015, the Swiss National Bank basically said, we want to peg our price here at 1.2 against the euro. And so traders around the world, not just traders, but brokerage houses, and everybody was thinking that 1.2 was the bottom. The Swiss National Bank, this big, reliable, big, safe, haven of Europe bank, is going to hold at 1.2. They they've clearly said we don't want the exchange rate to go below 1.2. Well, on a fabled day, that was the end of many brokerages, by the way, not just investors, but brokerages went down, funds went down, because all of a sudden they said, oops, never mind. And this happened in a blip. So suddenly they said, actually, we are no longer going to do that. And you just saw this dramatic drop. In fact,
It's over
in
2,000 pips.
pip measurement, that is a move crazy. Just a
2,300
monster
pips
move.
in about 5 minutes.
I think my computer froze for a second there. Yeah, crazy stuff. So,
and
just wanted to give a vision to that.
Yeah, that move was insane. I was very fortunate at that time. I was trading through that. I was not in the Euro Swiss, but I was short the dollar Swiss, short the pound Swiss based on some pivots and pockets and conditions. So those technically worked out for me. And then the aftermath was actually extremely profitable because, what was not surprising is once you look at the dust settling, this is what is pretty incredible about any market, but certainly the Forex market with the efficiencies. Once this move happened, I mean, how long did it take? We have a week and then an indecision week, and then this market started to rip back up. All I did in my trading was plotted a fib from there, and I bought this thing all the way back to a 382. I did that across the entire Swiss basket and made a ton of money over like the next month. And then from there, we had a low to high. We pulled back again, added more to it, and we filled this pocket. And this opened up a whole new can of worms for me as far as position trading, efficiencies in the market, inefficiencies in the market, looking at these crashes, because we had one in oil. We had a dollar move in 2014. We had an oil move in 2018. We had Brexit. What's funny is you're talking. This is like PTSD stuff in the markets, but in a good way, if there is such a thing. But 2016 is Brexit. So we have flash crashes. Like now that flash crashes are happening, that's like this cleansing mechanism in the Forex market. 2016 is Brexit. 2018 is the Great British Pound with 2018 is oil. 2020 is COVID, right? 2022 is the Japanese yen with intervention levels, which is an opposite flash crash because usually they always go in the direction of the prevailing trend. So it's always an interesting discussion where I am a Forex trader. I've been doing it since 2007. And I will say that I literally plan around the potential case of if I have a flash crash go against me, if I'm buying low and selling high in this market, I'm kind of counter trend trading this prevailing trend. If this market goes against me, I have to be prepared with my position size that I can stomach a flash crash, which maybe I'm planning too much for the outlier event, but I just rattled off. I mean, we've had 5 or 6 flash crashes in Forex over the last like 8 or 10 years. That's a lot. Like that's a crazy thing to think about where every single year there's like some one-off like flash crash event on a basket that busts up the retail traders, creates this massive high or low. I mean, we had one in 2020. When was the bond crash for the UK? When did the gilt crash? Was that 2022? If you look at the UK bonds, what am I looking for here? UK, is it freaking gilt? Oh shoot, what is it?
I don't actually know how to search that.
It's in here. It's like UK 10-year. Yeah, let's look at this. The UK 10-year. This might be the feed. Yeah, there you go. We had it right here. So this flash move to the upside was essentially the broken bond market. That's 2020. That's not right. Was this it? Yeah, it was September, October 2022. This was the break in the bond market. Yeah. So it keeps happening. Again, what does that all mean for a trader? I mean, it means trade small. It means risk management is the most important thing, as it always will be. If you want to survive and figure out how to stay in these markets and, find a way to trade some patterns and see the market do the same thing over again, you got to survive long enough to see it. So that's one thing I can say is I've been doing it for a long enough time where, I mean, I know it's exciting to think like, well, I'll just put all the money on the line right now. I'll buy Tilray at $2.25 and go diamond hands. Well, I mean, no, man, just place a trade. It's about number of occurrences. It's about quantity. It's about, logging 1,000 trades and making sure that can you generate profit. If you can do that, do it for another 1,000 trades, another 1,000 trades, and all of a sudden you're having this conversation with the three of us 2 years, 3 years, 5 years later, and you're a trader. You're truly a
Well,
trader at that point.
That's the thing, Chris. A lot of people will hear small positions and they'll say that's boring. It's never going to change my financial look. But again, as you mentioned, if you want to be doing this in 5 years, you have to have really small position. When I say small position, I'm saying think of what a small position size is and then half that. That's actually what you should probably be sizing your positions on, because people think like I can risk like 4%, 3%, 5%. I'm saying like risk like 0.5%, 1/4%. Try it, and especially if you're not profitable yet, you should be trading really, really small. But anyways, Chris, that's gonna do it for me. I'm gonna step out, leave you to it. Chris, you're welcome, or Frank, you're welcome to stick around if you'd like to talk about options or whatever. But I'm gonna just hand the show over. Before I do that, let me just say to everybody who's watching with us live, make sure to go show some love to Chris. We're gonna drop the link to his YouTube channel here in the chat. So there it is. Click this link. You can find him on YouTube. Find this Discord channel, all that sort of good stuff. And Chris, with that said, thanks for chatting, and I'll leave the show to you.
Of course. Thanks, Nick. Frank, you want to stick around a little bit?
Yeah, I have a few things to talk about before my battery dies. I don't know if you were here when I mentioned I was in the Q's call. I got in.
I heard you say something about the Qs, and you had some verticals going. So what do you have running on the Qs? You have an expiration on Thursday, is that correct?
Yeah, that's right. So I got a 444.78. That was it was an in the money call. It was 298 average price. Current price now is 357. So still hovering in a little bit of profit, but I placed a stop loss to kind of trail it and keep myself from losing any money there. I have a Tilray vertical, full margin, and all my money is in it. And so far it's doing pretty well. I'm up 33% on.
What's your vertical on Tilray? Is your strike two? Is it $2 on the strike? What's your Tilray?
It's it's half, or it's 50 cents spread, $1.50, and then $2.
So is it a put spread? So it's a short put at 2 and a long put at 150?
Yes, short put.
Okay. And I'm hoping you grabbed 20 plus cents, 20, 25 cents out of that trade?
No, I got it for 9 cents.
Okay. So for 9 cents credit. All right. So you're telling me that your risk is 41 cents. Is that correct? Per contract?
Yes.
Okay. When is the expiration? Thursday?
It is Thursday.
Okay. I mean, that's looking pretty good to me.
April 5th.
Oh, so next Friday. Okay. For a 9 cent credit, here's the good thing. I mean, you're obviously in a good position right now. Let me see what the expected move is on Tilray. So Tilray out to the 5th. We have earnings on the 8th, so it'd be nice to get out of that prior to expiration. Let me see the expected move. So to the downside, looking at about a 33-cent move. I don't see this getting too much lower than $2. Right now, the $2 strike is a 20 delta. So if I were to sell a put, let's just do a naked put, you've got a 74% chance that your trade is totally safe. So you want that to finish. Oh, Frank's dead. Never mind. So his battery died. I'll recap this. So Frank took a 2 by 150. So he has a credit spread, which is he sold the put at 2. He bought the put at 150 to define the risk for 9 cents. So his max profit's 9 cents a contract. Sounds like he went a little bit larger on the contract sizes. So maybe he can make, 50 to 100 bucks on it. I'm not sure what the contract size is. But the nice thing is I see here probability of profits around 74%. So the good thing is if Frank doesn't do anything he has a 74% chance that price just stays above $2 and he finishes out of the money and his options expire worthless and he collects that full credit up front. So that would be on the day of expiration on the 5th. The downside would be that if the price falls, okay, if we go from current price at 228 and we fall back to $2, Frank's break even on the trade is $1.91 because he's in for a $2 strike and he collected 9 cents. So anything that moves below 191 means that he's going to be showing a negative position in his account. And because he's risking 41 cents to make 9 cents, you can see that his reward to risk is a little bit backwards. And so that trade, basically he has done this. He puts a line in the sand at $2. If price threatens $2, he's going to be upside down in his position, and fingers crossed that it finishes greater than $2 by the 5th. Okay.
I'm
We're
back.
Did you plug it in?
Could you explain all of that once again?
Yeah. So I was just kind of talking through the trade, just to kind of define what is exactly happening. So on a good thing here, Frank, you have a 74% chance that your trade finishes out of the money and your options will be worthless. You'll collect the full credit. The bad thing is because you only collected 9 cents on a 50-cent spread, your break even's $1.91. So for your trade, you technically need Tilray to stay above 191 by the 5th. That has to happen for you in order to not lose on the trade. Okay. Now, because this trade, you're collecting 9 cents and you're risking 41 cents, and your delta at the $2 strike, your delta is 22. If price drops from 229 back down towards $2, you're going to show a loss. But remember that $2 is still your line in the sand. So as long as price stays above $2, you're in good shape. As long as price technically stays above 191 by expiration, you're in good shape. So just keep that in mind if you want to set a couple chart alarms. The thing that's challenging about your trade is right now I'm showing that it's pretty liquid here. Where I see like a 5-cent credit to a 6-cent credit to a 7-cent credit. So that's good that the spread for price is pretty tight, which means think about this. If by Thursday this week, if Tilray is up a little bit, would you consider, I don't know how big your trade size is as far as the contract size, but if your 9-cent credit is trading by the end of the week, say at 4 cents, would you be comfortable just taking profit and take your 5-cent profit? And the reason I say that is because you're taking about 50% of the profit right now, or taking 50% of the profit at some point just to protect yourself, or you can let it try to go out and finish worthless on the 5th. Your call. But that's what I was saying.
I think I would, but I also think you can take as many contracts as you want that that are already on the table. So if I had like 10 contracts, I could take like 5 off or something.
Yeah, you could
get that filled.
for sure.
So I might do that. It's at 6 cents now.
Yep.
So I feel pretty good about it. Today was a good day, or is a good day so far.
Yeah. Technically, it looks pretty good. And $2 is right here. Yeah, I think you're looking good, man. I like it.
Yeah, it's not a really safe play, but I wanted to mess around with it and see what could happen.
Yeah. Well, and here's what's interesting. At some point, at some point, look, this thing either goes sideways, and at some point this carves it out, and we either have structure like this where eventually this thing gets squeezed, or we have maybe some sideways movement and eventually this thing breaks higher. But I mean, if you're in here for $2 or even $2.29, even if you kind of set it and forget it, I mean, how difficult would it be for Tilray to get up to $4 to $5 and essentially have 100% upside from current price? It's very doable, but obviously this is your risk, this is your reward. So if I got in the trade right now, if I bought 100 shares of Tilray and I'm risking 220 bucks or so, I could still make 220 bucks. I mean, I would just want to take something that's risk defined, where I know that if I'm getting in the trade, 0 is essentially my risk, right? If I lose everything I put into it. So I just have to consider that as my potential trade, where this stock hasn't been lower than like $1.40 or so. And whether we have a justified reason to get to $4, $6, $8, I have no idea. And I also don't know, and Frank, I don't know if you follow this stock closely at all, but has this truly been up to, $67 back in 2021? It wouldn't surprise me. I mean, 2020, 2021, anything goes. Like the markets were just absolutely hog wild on anything up, and that it just seems crazy. But even for this thing to start, looks like IPO it in 2018 that rips up here to $300, and now we're talking about a $300 stock at some point that's now trading at $2.27. So there's
No,
really the
it's
true risk is
essentially
what is it about Tilray? What's
it
that?
is essentially worthless at this point. It's just what I
Okay.
saw in the news was some momentum plays that I'm trying to get through, but it's not
Yeah,
something I'm trying to hold on for a long term
I
in
get it.
option.
This is something I always look at too. If I'm looking at any stock and evaluating anything, I just want to look at the old snowflake analysis. So we've got value, we've got future growth, we've got financially healthy, which is pretty good. I mean, it checks most of the boxes there. Trading well below estimated value, earnings forecast to grow 115% per year. That's crazy high. Good value compared to peers in industry, which we can see what the competitors are. So we've got pharmaceuticals, 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 which is funny because these are probably all in the cannabis business as well, but they keep the name pharmaceuticals to make it sound a little bit more legit, right? But let's see
It's
what the actual
medical, I guess.
estimated value is. Medical, yeah, okay, that's fair. I mean, and again, look, the whole industry, it is what it is. I mean, I'm happy that it's. I mean, I don't know the terminology, but for the Schedule 1 narcotics or Schedule Class 135, I don't know, whatever it is. Um, I think it's fine. I mean, the U.S. per capita has the most incarcerations in the world. So if people are in there for owning, selling, distributing, like I get it, it's probably a little bit frowned upon. But even this undervalued. I mean, we're talking about a $2.20 stock that fair value is around 466. Like I said, if it has enough to double, I think it's worth considering, right? I mean, how many stocks out there right now could be like, I mean, within reason, we could go up 100%. I mean, that's more than Bitcoin. I wouldn't say that Bitcoin goes from 70 to 140. I'd say Bitcoin maybe stretches to 95 to 100. The stocks I think are doubling are, I mean, Nvidia's already done it several times. SMCI has already done it several times. The stocks that I like right now that possibly have the chance of doubling are stocks that are so beat up and so hated on and so uncertain that I still have to wait a little bit longer. I look at this, Alibaba, anything China related. People can hate on China all they want. I'm not really looking to buy the stock necessarily, but I'm certainly looking for option plays. And if Alibaba holds this support level at $60, I am long on this thing until we get to that level around 120 to 130. That is a 100% move. Now, there's ways that I can take, a $1,000 to $5,000 position and I can make that profit. So if I put a $1,000 stake in it, I can make $1,000. I can make more than that if I put in some credit spreads, generate some income, and I get some better time positions with some. I mean, if I can do the in the money call at like a 70 delta, and I can control 100 shares to kind of make it like it trades like 100 delta. Then if it goes from 70 to 120, that's what's going to feel like about $5 of credit per contract in my call side, but it's just not there yet. Like for me,
Are these
Alibaba
bull
either
call
drifts
spreads?
lower. What's that? Go ahead.
Are these bull call spreads?
They'd probably be diagonals where I would do like the longer call out to like January of next year, maybe into March of next year if I can go out a year and do a leap essentially. I would go out that far and then every 30 to 60 days I would just sell against it. And I would try to keep that sell call. So let's throw a hypothetical out here. Let's look at it right now actually. So I'll make the numbers bigger so it's a little easier to see. So if I go into 100% for the Zoom, go into Alibaba. So I do have some ownership of Baidu, and I have a covered call out to April for $100. Baidu's trading at 104.50. If I get the stock called away at $100, I make about $600 on the shares that I have, which is fine because initially it was a credit spread that I'm repairing because I was assigned the shares. I lowered the cost basis by adding a couple covered calls. I lowered the cost basis again by rolling a couple covered calls. Long story short, I mean, I'm taking a position that would have been like a loss of $1.25, and I'm turning it into a $500 win. So what would have been a $125 loss is now a $500 win. That's a $600+ swing in my favor. That's the beautiful thing about trading options is, yeah, I've got the buying power to hang on to a stock that's trading for $100 and my break even is like 95. So anyway, let's talk BABA. And right now we're trading at 71. So there's a couple things I could do. Now I do have some credit spreads on this one where I went down to like 65 and 60, and I'm just staying out of the way with some credit spreads. So I can go out of the money. I did that for like, the 45 to 60 day window. I could do that right now. I could do a 65 by 60, collect 73 cents credit. There's a 76% chance of profit on that trade if I want to move the strikes. Now I have an 89% chance of profit. I can still get 23 cents on this trade. Now, granted, the risk is not great compared to my reward, but if I did, well, I don't love that trade. I think that's not enough premium. This is a little bit better. And could I accept, and here's what I would ask myself, could I accept the shares at $65 and lower the cost basis to around $64.30? Let's take a look and see where 64.30 is on this chart. This low right here, all the way back to 2022, is around $58. If I own the shares at 64 and change, or 64 and change, could I lower the cost basis to get this thing effectively below this $59 level? Probably. Ideally, the trade would be this. If I just buy, let's say, a $59 or $60 call, let's see what that costs us. So let's have this like, diagonal spread type conversation. If I went out to March of next year, I'm essentially going to go out 12 months and say from now until March, could this stock go up in price? Well, if I buy the lowest 58, right? The lowest $58, I could buy a 73 delta $60 call. Okay. And what's that going to cost me, Frank? You see this? Can you see the numbers? What's it going to cost me?
Say the
if I buy
price,
Yep. So I'm going to buy a $60 call out
60.
to March of next year. So what's my debit show right here?
That is 78.75.
Correct. That's my break even. So it's going to cost me $18.70. Okay. So if I buy the $60 call, I'm going to pay $18.65. If I did this for one contract, let me see if I can. I'm just going to put some big fat yellow letters on here. Let's get this yellow. So if I buy this, so I'll type it here. So the 3/21 of 25. So I'm going out a year, effectively a year, and then I buy to open the $60 call. Okay, that is an 1850 debit. All right, it's an 1850 debit, which puts my break even, like you said, Frank, at $78.50 is my break even price. Now, if I take that trade, okay, and so if I pay the trade right now and I pay for 1850 on the debit, what I would do against that is if I went out, current price is 71.39. I'd probably go out 30 to 40 days. I can do this, right before earnings here, May 16th. We have a May 3rd expiration. If I go out to the 17th, if we have a good earnings report on this is BABA. So if I have a good earnings report on BABA, I would want to make sure that I'm selling something against this way out of the way. So if my debit break even is 78.50, where I need the price to go to 78.50, if I sold the $80 strike, okay, that would give me another $1.20 off of this. And so I could take this trade right here where I could sell. This would be a May 17 expiration, and this would be an $80. This would be a sell to open. That'd be an $80 call for $1.20. So that makes my break even 77.30 and potential call away at 80. All right.
Where'd you see the $1.20 from?
Right. It's on the bid price. So right here, see how it says $1.18?
Okay, but the cost of this trade is $16.81.
Yes, because I went from an 1850 debit and I'm taking away the $1.20.
Okay.
Right.
That's
so
the new
so initially,
cost.
yeah. So if I did this, if I did it together as a calendar spread, I pay the 1850 debit, but then I pair that with my May expiration. I take away that $1.20. So now it's trading for a debit of debit of 1678.
Gotcha.
Which isn't bad. So and what would that do? Well, that makes my break even now from a $60 position. My break even is 76. So I mean the numbers are clearly changing as we're doing this, but this makes my break even. Let me get rid of these sloppiness. So from 60, okay, if the trade cost me a total of 1681, that makes my break even 76.81. Correct?
Yeah.
Okay. So if the stock gets called away greater than $80, how much money do I make on the trade?
If it goes greater than 80,
If it
just
goes
the
greater than
difference.
80, what do I make?
$3 something cents.
Yep. So $3.19. So if I do nothing other than take this trade by May 17th, if the stock price is above 80 bucks, I still make $3.19. Now let's put that in perspective. If I make 319 divided by my debit of 1685, I just want to see what a percentage profit that is. So if I make 319 divided by 1680, that's a 19% return over the course of 52 days on a stock that I don't even own, on a risk of, $1,600. I make 300 bucks on $1,600. Probability of profit pretty high, just because we're in the money on our call, so we have that intrinsic value. I know that I'm going way further out in time, but there's two ways this works. One is I just get the stock called away and I make my $3 a profit, or I just do this over and over again for the next like 30 days, 60 days, the next 30 days, 60 days. And I just lower my cost basis where my total debit goes from 1680 to 1650 to $16 to $15 to $14. I lower the cost basis as much as I possibly can, where I want the stock price to go. I mean, I looked at the chart here, right? I wouldn't be interested in the stock if I didn't think we had upside potential. So if the stock itself goes from, let's say it just holds this level and goes up. Well, if it holds this level, goes up, I mean, that gets us up to 100 bucks. As long as I don't get in the way of this, I mean, I want Alibaba to rip up here to $100. I want my, break even of roughly $77 to be, let's talk about this at 100 bucks, and I can make $23 a contract. I want that. I mean, that's what I want. So there's just a lot of ways to play it, and so I don't have to be super time sensitive. If I believe the stock's going to go up, what the risk is right here. Obviously, if the risk is like the stock just plummets, well, that's no good, but I have defined risk on the initial trade. But if the stock price takes a while and more time passes, well, my call option, my long call option is just going to keep like deteriorating, right? That time decay, and I'm gonna start seeing like it's called theta decay, which is time doesn't work in my favor when I'm long the option. So all that means is I like this trade a lot, and I have been telling myself and clients, like, I like this trade, I like the exposure. I'm just trying to figure out what the best way is to play it. And as we're talking about it right now, I'm kind of talking myself into the trade. So I do like this position a lot. This is probably something I'm interested in doing. If China starts to lift animal spirits, and like I said, I know that I might be early to this trade. I know that Baidu and Baba could both be trades where they just need some time. I mean, you can see I got a bunch of stuff going on here, but look at the technicals. I mean, all the way up to this. So this is a giant, massive head and shoulders. If this is the patience needed for the right shoulder, once we get some clearance, I mean, Baidu, for example, breaks above 110. There's room to 160. If we come back down to the same lows again at $80, $80 to 160 is 100% upside. So these are some trades that I'm very interested in because I can position for them where I don't have to own any of these shares. I don't have to tie up a bunch of capital. Instead of me tying up, $8,000 to buy, let's say that this came down to $80. If I bought 100 shares and I tie up $8,000 in cash, I could do that for probably $1,000 or $2,000 with options, and I could make better returns. So anyway, that's probably how I'll play this. I mean, you and I've talked about it on this show quite a bit. Calendar spreads for me make a lot of sense because I go out in time to just say, this is my directional play. And then against that, I try to make my cost cheaper and cheaper and cheaper over time. So I'm in trade. So right now I have a list, right? BITO, JD, the SPY, the Qs, IWM, GLD, PayPal, Chewy, and Pfizer. All those symbols right there, I'm in calendar spreads where I have a long dated option and I'm selling against it because I want to make it cheaper every 30 to 60 days. I want to lower my cost basis, track my break evens. And if those symbols continue to go up, I'm just trying to keep my sell levels out of the way so I can continue to make those gains.
So are you buying a call in the money and then you
Yes,
sell a
it's deeper
call?
in the money.
Okay, deep in the money, and then you sell a call way out of the money?
Not way out of the money. So if I bought the 60, that's trading right now. That's a 70 delta. So that's like, if I'm going in the money, I'm typically liking that like 70 to 75 delta. So that's an in the money. If I go to my May expiration that I would sell against it, that's a 20 delta. So the way I like to trade it is this. If I'm going to buy, I'm going to buy an in the money option typically for like a 70 to 75 delta. If I'm going to sell and I don't want the stock called away, okay, if I don't want the stock called away, I'm going to sell like a 20 to 15 delta, because the probability of a 20 delta getting called away is 20%, right? Like the deltas, like we talked about in our chat. If I have a 20 delta, that means I have about an 80% probability that that stock will, or that symbol will close out of the money at that strike price. So if I clear this trade up and just go to the May expiration, let me show you this. If all I did was put on that sell call, if I put in a sell call for May 17th, look at my probability profit, 83%. So there's an 83% chance that I do not get the stock called away at 80 bucks, which means I can take that extra dollar and change. That lowers the cost basis of my debit. I don't have to get the stock called away. Then I go out another cycle. So I go from this May expiration to maybe the June or July expiration, and I go out to July and I look at another 80 or 85. In this case, if I do another 22 delta, I do an $85 strike and I get $1.65 for that. And I do it again and again and again, and I just take that debit from $17 down to 16 or $15, and that just helps the cause overall, that I lower my cost basis.
Yeah.
Okay.
I
So
like that.
yeah. So I mean, I'm liking this enough where as we wrap up the session, I've got another trading room here at 11 o'clock. I'm probably going to have a conversation around this. I do think that if I get in now, I'm definitely early. I'm definitely early. But if I get, I mean, we're right in that window with a pre-summer push. If this starts to go up, and here's what I should do. I should probably wait for Baidu to get above $110 before I decide to get long. Because if we're above $110 and there's momentum behind this, I can still buy my 70 delta call. It might be a $70 strike price, but there's at least confirmation that the price is moving, as opposed to if I get involved now and price just does this for another couple of months, that doesn't help me.
Yeah.
In fact, that makes it worse, because my long option is just going to have time decay, and there's no value being built into that option. So the smart thing for me to do would be to wait. On both Baba and Baidu, I need to wait. So Baidu probably needs to get above 108 to 109, and Alibaba needs to get above probably 80 bucks. So the good thing is, if we get above 80 bucks, I like that trade a lot, all the way back up to these highs. If we come down to this level, I don't think there's anything that's going to prevent me from saying this is a great bargain, and I'm going to start getting positioned accordingly there. So couple things, and I'm putting that on your radar as well if you're interested. I like these trades. I've been watching these trades for probably the last 12 months, and now it's time to start considering some action. And credit spreads have been good and bad. I've had some wins, I've had some losses. But like I said, I did decide to take ownership of Baidu. I had the buying power, and Baidu is positioned a little bit better than Alibaba at the moment. We're starting to break this trend line. All I needed to do is stay above $100. If it does that, I'll make $500 profit, which I'm happy with, and we'll keep an eye on it. So I saw somebody posted in the chat, PayPal and AA. Go ahead.
I was just gonna say, how was Baidu and Alibaba doing financially? Because I don't really know.
I'll show you. Yeah, let's
money-wise.
take a look. So again, there's the at a glance is right here. So let's go Alibaba. I mean, I can't ask for something at a glance to look better than this. Healthy, past performance is good, value play, doesn't have dividends, but we're trading below estimated values. We're forecast to grow. I mean, here's what I'm looking at. If I'm investing in anything in 2024, it's companies that make money. Has to be companies that make money. Has to be companies that if they're limited borrowing, low levels of debt, they've got cash on hand. That to me, I think, is the biggest differentiator from it, because right now it's like Nvidia's all about revenue, all about price to sales, and Nvidia's like the poster child in the storied stock right now. But everything else, when it comes down to it, I mean, what you're looking at here is you're just looking at this sentiment drag from China. Everyone right now, Main Street, Wall Street's hearing and putting out there that China is uninvestable. They're not. I mean, do I think it's you know that the books and the reporting and the accounting practices are up to par? Probably not. There's might be some cooking the books, if you will. That being said, if I'm just taking defined risk trades with options, do I think that China's market's going to implode? Probably not. Do I think China wants to have a financial collapse on their hands? Probably not. So I think it's just a matter of time where, yes, they're not doing a debt fueled rally like we do in the US. They're not doing a debt fueled rally like they do in the Japan or in Japan. But these stocks financially are healthy. I mean, Alibaba is essentially if I'm not mistaken, isn't this like the Amazon of China? And Baidu is like the Google of China. That's kind of if I'm under the right impression. This is technology, infrastructure, and marketing to help merchants, brands, retailers. This is the Amazon of China. And if you look at Baidu, if I'm not mistaken, that is the Google of China. And it looks a little bit less as far as like the checking the snowflake analysis here, but price to earnings ratio below US market. Okay, fine. Earnings forecast to grow roughly 10%. Earnings grew by 181% the last year, trading at a good value compared to peers. And what are the peers? Match Group, IAC, Zoom, Infotech. I have no idea. But these stocks for me, they stand out. It's the Amazon of China. It's the Google of China. I mean, heck, man, I'm in freaking Yum Brands right now. KFC, A&W, Taco Bell, the Yum China Holdings. I'm in this stock right now. I mean, it checks a lot of boxes, and the risk is it's China. That's the risk. But do those stocks go to zero? Probably not. Does the financial market in China go to zero? Probably not. So if the government is a little bit more supportive, I feel like those stocks give them, 6 months, 12 months. If China starts to get a little bit more vocal about supporting real estate, supporting technology, supporting the overall, economy, whether it's debt fueled or not, as long as they're talking up the markets, which goes a long way. We do it all the time in the US. We talk it up. It's moral suasion, it's jawboning, that these stocks look pretty good. So that's how they look to me. That's how I'm looking at them fundamentally. I know that there's risk in the trade. I don't think they're a sure thing, but I do think with options, I can keep my cost basis low. I don't have to tie up a bunch of capital. And I think the upside is pretty solid. So I'd love to take a $1,600 risk that pays me $3,000, $4,000, $5,000 in profit. Yeah. That's a good asymmetry to me, So somebody asked about PayPal and American Airlines. Airlines are going to be tricky. If you want to invest in airlines, my favorite airline is Delta. I'm in JetBlue right now with some positions. So JetBlue is at 746. I own JetBlue around $6 because I've used options for so long. It's lowered my cost basis. JetBlue to me I think it was Carl Icahn that stepped on board. Is he our activist investor that jumped in and said he took about a 9% stake in JetBlue? I'd love to see JetBlue get back to $9 or $10, and I'll probably dump the stock. I know this has a lot of upside potential. I mean, we're talking about you're buying an airline here below COVID levels. You're talking about a potential reversal pattern right here. If we get one, I mean, could we get to $12.50 to $13? Yes, we don't have to come to all-time highs again. I'm just looking for a wave structure. PayPal, I did put a synthetic play. I mentioned that earlier, Frank. One of my diagonal trades is PayPal, and I think I have it listed here. Maintain inline. So I did. I'll show you what I have on PayPal.
Volatility? Is that what your diagonal is for, to bet on volatility?
No, my diagonal, and this is like the diagonal spread when I'm out in the long position and I'm selling against it. So let me show you my trade here. So I have PayPal. Let's go to this position here. Positions for PayPal. Boom. So I have a $55 long call, and I'm selling against it the $85 call. I can tell you exactly what my break even is. So if I don't have to do anything other than watch the trade develop as is, I'll tell you exactly what I'm going to get paid on the trade. So if PayPal, which is currently trading around $67, rips up into May up to $80+, then I'll tell you what I'm going to make on the trade. Let me go here and switch my spreadsheet over 1 second. Okay, so let me go to my trade tracker. Let's go PayPal. And I have my break even on PayPal is $70.75. Okay, so my break even is $70.75. Oops. So $70.75. The current price is trading at $67.28. I need PayPal to rally 347 over the next, 50 days? If I'm going to lose the stock by 52 days out, if it rallies up to 85 plus, I'll get the stock called away. Now, if I get the stock called away, let me show that position again. I'm in 2 contracts. So if I get the stock called away, let's see, 347 is my break even. So 70.75. Let's say I get it called away $85. I make $14.25 a share. I make $28.50 in about 2 months. That, to me, that's a 1%. That's a 1% plus profit on this account over a 2-month window. If I do that think about this. If I do that right there for 20 trades, I'm up 20% in this account. Can I find 20 PayPals? Sure. Can I also take PayPal and increase the profit by not getting it called away 85, moving the strike up to 87.50, moving it up to 90, keep leveling up to this, because again, I look at the stock. Where can PayPal go? We've had this recovery on Meta, on Google, on Amazon, on Apple, on everything. And I'm not saying that fintech is the best thing to be in. There's going to be a lot of competition, but I do think that from right now, this low and breaking the trend line, I think PayPal can get to this price. This is $100, man. So if I'm going to pick a number, I would want PayPal to get up to $100 before I decide I'm going to get rid of it. And realistically, I can see it getting there as well. And if you just take a simple, this doesn't have to be complicated. Take a high to a low and look at a big fat Fibonacci and where the levels is going to pull back to. If we pull back to a 236 or a 382 fib level, that puts the stock over $100. So do I like PayPal? Yeah, I think it might take time to finally, carve out this bottom, but if and when it does, there's a lot of upside here, man. So I think this is a tech type play with some value. If you look at it from my snowflake analysis, which I got that browser here somewhere, check out PayPal.
PayPal.
Yep.
Yeah, that's been
pretty good.
So harshly under pressure for so long. I've been curious about when it was going to turn around too.
Yeah, and it's been taken forever, but look, PayPal put me through college. I bought and sold golf clubs in college and would make thousands of dollars on buying clubs, selling clubs, finding like bargain stuff, refinishing them. I did all the stuff where I could just do club repair and I could refinish clubs and I'd sell them for $500 to $1,000. PayPal was the main instrument to be an eBay seller. So PayPal's always been around in my life for 20 plus years, and doesn't mean I'm just like all in on the stock. It just means I see that there's utility to it. I see there's value to it. There's use to it. And PayPal also lets you buy crypto, which is a whole nother platform as well, right? So there's something there. I get there's competition. I'm curious if I dig a little bit deeper, like what's the thing that has held it down, right? It's like the market as a whole, and I don't know if it's higher borrowing costs, and this thing has a big debt level, but we can check a couple things here. If I go to FinViz and just see what does their balance sheet look like. So PayPal, and let's just see what they have. Let's check the numbers. So we are looking at PayPal. They have cash. They have limit. For cash to debt, their debt is reasonable. I'm looking at earnings per share. So next year, 10.37. Next 5 years, 19.8. This kind of fits the mold of this is a value tech play, in my opinion. Doesn't mean it has to be right. There could be all sorts of reasons where the market doesn't want to do anything with it, but they have money. They have cash. They can cover their debt. And man, their earnings are forecasted for the next year, 5 years to be solid. And they have cash, limited debt, good flow structure, good earnings per shares. I think they'll beat some expectations over the next, maybe this year would be nice to see. Now that we're getting some technical breakouts, let's see if we can break above, 70 plus. So here's my challenge. I realistically think that I could get back to $125 a share. Now, I showed you my position. What do I need to do here? If I get the stock called away $85, I still make money on the trade. But wouldn't it be nice if I can keep moving my cost basis down, but keep increasing my strike prices higher to open up? If I think about the alligator mouth, I can open up my profit where I have the option for this level, right? And I'm using the sell calls to lower my cost basis, lower my cost basis, lower my cost basis. And if I can ultimately get it called away at like $100 versus 85, well, that profit potential is insanely different. If I get it called away for 85, there's my profit. If I get my cost basis, lowered, but also get my strike prices moved up, I get it called away for $100. I mean, it's dramatically more money. Doesn't mean I'm going to get it, spot on, but I'm going to work my butt off to make sure that I don't lose on the trade. So if it gets called away, I still make money, but I do want to try to roll this up if I can. I want to get it out there to $90, $95, $100 and see if I can make a decent chunk of profit. So
you're going to be selling
options.
calls every 30, 60 days, like you're saying?
Most likely. So right now I'm in a trade that goes out to May. Gary says you don't need to own the stock before you do a diagonal. That's correct. You can just do so. Gary, think about it this way. It's kind of like a synthetic play. So it's like a poor man's covered call where you buy the call out in time and then you sell against it. You don't have to own the stock because you have a long call that's further dated and you can sell calls against it. So there's no, as far as buying power goes, let's say I take the trade, let's say I take a fresh position on this. I'll just start from scratch. So we're trading at 67.20. Let me go into the option chain here. So I'll go to trade, PayPal. Let's go out to, let's go to December. Let's just say by the end of the year, I want to buy PayPal. So I'll do the $60 or the 57.50 strike. Okay. If I just buy this out to December, if I did a 68 delta or 72 delta, this gets me $2.50. It's going to make me pay another $2.40. So it's essentially paying for all that intrinsic value, which I think is okay. So I'll do this, Frank. I'm gonna look at buying the 57.50 out to December. My break even on the trade. Let's do the math here, and then I've got to switch gears in a couple minutes. But if I'm at 57.25, all right, and I pay the debit of 16.25, that puts my break even at 73.50. So the stock price has to rally about $6. Now, if against that call option, if I go out, so this is out 269 days. If against this, I now go, like you said, about 30 to 60 days. If I sell a May option against it, my break even is what? $73 and change, right? So I did the 57.50. I'm paying 16.25 or something like that. So that's roughly my break even. That means if I'm going to sell a call against this, I can't sell a call for cheaper than 73.75. If I sell a 72.50 call, I'm essentially going to get a break even, right? If I sell the 72.50, I collect 266, which is fine, but why would I do that? Why would I lock in like a $1 win? That's silly. So what I do is I go to that 20 delta this is perfect. I could do the $80 call right here. If I sell the $80 call out to May, now I lower my cost basis. My debit's $15. I get it called away for 57.50. Let's do the math on this. So 57.50 is my strike. You can see the debit's trading for 15.04. My break even is 72.54. If all this does is get called away by May at $80, I make $7.46. If I do one contract, I make $746. So think about this, 746 divided by a $1,500 debit. I'm making 50% on that position. That's pretty good, man. To me, that's really good. So I like the trade. It's just, what I want to believe in is I'm giving myself enough time that I want the stock to rally. Worst case scenario for me is that the stock just goes sideways. That's the worst case scenario. If the stock goes sideways, my call option doesn't gain like I want it to. But if this stock starts to go up, I mean, a long option is a directional play. So I want the stock to go up, and I'm trying to make it so where my call option can appreciate, and then I can sell against it to lower my cost basis. So, Frank, I think for me in summary today, look, Baba and Baidu, they're on my radar. Okay, PayPal, I'm already in. It was a toss-up between PayPal and Square or Block. Block, I think, is SQ. So this one's already started to rip a little bit to the upside, but I'm looking at this. If we get above, 85, then I think there's some more upside here as well. But if we start to pull back and have a bottom, then I'll just reestablish some fresh positions down here and range trade it. So I looked at it from the snowflake analysis. I think PayPal is better on this. So look at PayPal. Just take a snapshot of this. PayPal versus SQ. Hang on. SQ. Survey says. Come on. SQ.
Some internet problems.
I don't know. Sometimes I just have 50 browsers running and hang on a second. There it is. It was right there, you turds. SQ. There it is. Okay. So if you were to pick between the two, which one, just from a sheer snowflake analysis, which one looks cleaner?
I mean, I guess PayPal, but what do
Here's
you?
PayPal right here. This is PayPal. This is SQ. PayPal, SQ. So,
Yeah,
and again, it's at a glance, but just like healthier, past performance, value, okay, healthy, future performance, and value. But I guess on the one thing on PayPal, it's like I don't have the future column on PayPal, which is kind of unfortunate. But they have cash. Their EPS is forecasted to grow pretty realistically 10 to 20%. I think, look, man, I'm not looking to hold this thing forever. I'm talking about a trade that if I'm right in the next, 10 to 12 months, thumbs up for me. That's all I need. I mean, we're in a good enough market that I think we could have a wide enough net that I think a lot of stocks have the ability to go up. If people look, how about this? If people are sick of putting money in the Mag 7 and Nvidia, maybe they turn to a value tech stock like PayPal. Maybe. So we'll find out. There's always risk in trading, but to me, it's defined. I can take a 1% risk and have 3, 4, 5% upside. I'll
yeah,
take trades like that all day long.
fair enough.
So, all right, dude. Any final words for today? That was a session flew by. That was fun.
Yeah, no, not really. I actually, as we were talking about this, my Q call got called away, so I guess I took a break-even-ish profit
Oh,
on that.
so you're okay. So your limit, your stop limit.
Yeah.
Okay, so you got tapped at the stop. Okay,
Hmm.
hopefully you walked away with some profit though.
I did, but it was pretty little. It was like 20
Okay,
or $30. But
okay. Yeah. I mean, well, I'm looking at. Let me float this out really quickly. This is the QQQ since the FOMC. FOMC was. Let me go back to like a 15-minute time frame or a daily. Let's go daily. I mean, basically, since we had the run up in the Fed. Let me zoom in here. Since we had the run up in the Fed, we have seen the markets essentially go to sleep. I mean, so Tuesday, Monday, Friday, Thursday, Wednesday, this is the Fed candle right here. And then we had the gap up for the Qs to test the all-time highs, and it's just stuck. So unfortunately, I just think that this market for this week and a shortened trading week, maybe not a lot of crazy excitement happens, which I thought for an end of the quarter, there'd be a little bit more excitement in the markets. And the week is not done, of course. Maybe something happens by Thursday for those crazy expirations. But as we get into that first week of April, I'm really curious to see what happens. I'm not sure if you were with me yesterday, and also you and Nick. Let's take like 2 more minutes here, and they'll switch to my trading room. You and Nick were talking about the presidential election. I thought this was an interesting stat. Like this goes back 1933 to now, excluding the 2001-2002 window because of 9/11. So whether it's a Democratic president or Republican president, what you can see here is that a House and Senate divided is what the market likes the most because there's no major change in policy. So regardless of what happens this year, whether it's a freaking revisiting of the 2 oldest presidents ever in history to do it for round 2, the market's still like divided House and Senate, and whatever president, Democrat or Republican, it really doesn't matter. To me to say like, well, you can get 13.7% with a Republican versus 13.6 with a Democrat. Who cares? They're both puppets in my opinion. And it's going to be just crazy annoying anyway. So I don't think it matters what happens. I think it's more just how far left and how far right, how much noise is there going to be. There's going to be some implications with relationships to China, relationships to war in the Middle East, to aid packages, to global democracy, right? Globalization. Whether you're, I'm not here to get political. I'm just saying that the markets historically average a bullish year, the 4th year of any presidential term, and going into an election year, the markets also average like 12%, 13% a year. So we're right there. This is also interesting before we go. If you're only invested during Democratic administrations or you're only invested during Republican administrations, so if you want to be super political out there, here are your gains, right? If you're like, I only believe in investing when the Republicans are in power, well, there's your gain. If you're fully invested and it's time in the market, there's your return. So time in the market is more important than timing the market. We should know that. That's a classic adage for trading and investing. So who cares, man? It's going to be a bunch of noise. I say right now, I've got some blinders on, blocking out the noise. Let's trade. Let's focus on. Look, it's a lot easier market to trade this year than it was in 2022. It's a lot easier to trade this market than the nonsense in 2020, outside of the courage to buy. So I think traders don't really realize how good they have it when the market can just keep going higher, melt up, melt up, melt up. Bots, buy the dips. It's like we're in a great environment right now. So anyway, thought I'd share that'd be interesting.
Yeah, no, very interesting
So
stuff.
hey, real quick, this is a real personal note. I can hit you up in Discord as well. I've saw a couple people asking me to post my Discord, so I will. Also, I'm gonna be, I'm coming to Atlanta on the 8th. But I think I'm flying into Atlanta this weekend as well. I'm gonna go see some family in South Carolina over the weekend. But it's Easter weekend. You guys have a great weekend. But on the 8th, I'll plan on that week, the 8th through the 11th, or April, the 8th through the 12th. I'll be in your neck of the woods. So only a couple hours away from Atlanta. So if I get to pop and see you guys, it'd be cool.
Any day that week, 8th through the 12th, that's good. So just let us know.
Sounds good. All right, before I go, I'll post my Discord right here. And there's that. The dollar CAD for Korea booze. Yeah, dollar CAD. It's funny that you're picking my least favorite currency. Dollar CAD on the daily. Frank, what do you think? Do you like the dollar CAD?
No, I never like dollar CAD because of that. Go to like the weekly time frame. The dollar CAD just does not ever do what I think it will do, and it stays in this trend. It's just stuck in a trend for so long that there's you don't really know where it's gonna move, and I'm not a fan of it just overall.
No, I agree. This is what I've been telling traders for months. And last year, this thing was so slippery. We did buy it down here. We made some profit at the halfway point. We sold it up here, made some profit at the halfway point. We bought it here, made some money. We did fine in the range. But at the middle right now, I think this is so sloppy. We're in the middle. It's like, I don't know what direction we want to go. Oil looks like it's getting higher. I don't really know what direction the dollar's trying to play out right now. So I'll say this. I don't want to trade the middle. If it gets up to 139, 140, there's two ways I would trade this. If I get to the dollar and the dollar CAD, this is how I would consider trading it. This structure hasn't changed at all. Okay. Let's say that we have a monetary policy shift. If we see the BOC cuts rates and all of a sudden this thing flags up here, then I think we're going to 139, 140. I think that's a tradable spot. If oil continues higher, the dollar gets weaker, then we might range back down to these lows. We could also break and flag and head back down to 1.32, not necessarily on the BOC, but on oil. If oil gets stronger, I can see the dollar CAD revisiting this 32 to 31 low. If oil stays steady, but the dollar is stronger and the BOC cuts rates earlier than the Fed, I can see us getting to 139. But it is such a crappy spot right here to trade it. I don't love it. So I need to see the change in behavior because it's just too much of the same. Too much of the same, too much noise. I think it's garbage. Garbage.
No, I agree. I'm not a fan of this pair. No.
All right,
no
I like
direction.
it. That's exactly right. So, and I'm sure EdgeFinder shows the same thing.
Your analysis also is like, yeah, well, maybe 10 weeks from now when price is up there, but
if I don't take a trade, I don't care. I mean, if it's not obvious to me, like I'm not going to take a trade on this pair. There's 20 others to work with. I'm currently riding, basket of Swiss. I'm up. I mean, I did it this morning. I think I posted this in my one of my trading rooms for Portfolio Builder. I'm up 1,000 pips right now, just floating profit on my Swiss crosses. So who cares about the dollar CAD when I'm sitting in trades that are just running? I want to add to them. I want to make my profits bigger. I think the direction is already confirmed. So that to me is a much better decision than trying to find a trade on dollar CAD. If I've got another, 500 pips upside on the Euro Swiss or another, 500 or 600 pips upside on the dollar Swiss, pay attention to that as opposed to what do I do on the dollar CAD? It might be a terrible trade right now. And the other pairs that are confirmed in wide open spaces, that's the position I want to be in. So that's what I like to find. Yep. Great. So Chris asking what pairs right now. To me, again, you're asking my personal opinion, so I'm just going to give it to you straight. Anything against the Swiss, I'm long Aussie Swiss, long CAD Swiss, long Euro Swiss, long pound Swiss, long New Zealand Swiss, long dollar Swiss. That's it. I will take those trades. I've been literally talking about those for 2 years. It's been a patient act for me, but it's starting to materialize. And I mean, I'm just letting profits roll in. So I'm adding to it. My profit targets still haven't been hit. So that'll be a fun day when all of a sudden it's like, Frank, I just closed out for 25,000 pips on my Swiss crosses. That's a good day. So it's coming, man. Give me another year. I think I'll get there.
Just over the horizon.
Exactly. So, all right, everybody. Thanks, Frank. Any final words? I'm ready to bounce. I'm already 15 minutes behind.
No, I guess thanks for walking us through that, and once again teaching me more about your option strategies. I like the calendar spreads, so I'm going to be trying to look at things similar to that on my account too. So yeah,
cool. Yep. And hit me up if you need anything, as usual.
I will. Thank you so much.
Okay. Thanks, everybody. Have a good day. See you, Frank.
See you, Chris.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.